Hi everyone, let's have a look at my medium time frame, low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the medium time frame preferred bearish scenario where we're looking for a 3-wave structure in a wave W followed by a 3-wave structure in a wave X and then eventually more downside in a wave Y. If we then look at this wave X over here, we're looking at the 3-wave structure as mentioned, so a 1, 2, 3-wave move to the upside, where the targets for wave X are between the 0.382 and the 0.886, so that is a very big target area. However, based on the structure that we have over here, one can estimate a little bit better what the high might be. And what I think is interesting is that around the 0.5 we have the highs over here at 28.3k for a potential reversal area, but maybe even more interesting, the golden pocket over here. The golden pocket has confluence with the target box between 28.9k and 29.2k for a very important resistance area, and then potentially the high of this wave X for then a move to the downside in a wave Y. Now a wave Y can be many different patterns. It can be a zigzag and then this being a double zigzag 535 structure here to the downside. It can also be an expanding flat. It can also be a triangle. So of course we have to wait and see what is going to happen once wave X potentially is in, but nonetheless this target area is very important also for a potential short setup where then shorts can be entered in the target area over here. Stop loss above as the invalidation is going to be the high at 31k and then looking for downside. No financial advice, but based on the scenario that we have in front of us, this might be an interesting trade. If you then look at the bearish alternative scenario, we already have a W in and then an expanding flat W over here, followed by a corrective structure in X. And then now we're looking for a 3-wave move to the downside in a wave Y, which is then a zigzag. So a 5, 3, and then already a 5-wave move to the downside. So we're basically saying that this 3-wave corrective structure is already finished. Now if we then look at the target area for wave Y, if this is then a zigzag in wave Y, then you have to take the trend-based fib extension from the high of X to then the low over here to the high of this second move. So this is then an A, B, C, so from the high to the low of A to the high of B, and then you get these targets for wave Y. And what I don't really like about this scenario is that the targets for wave Y don't have any confluence with my target boxes. So the 0.618 is hovering above the yellow target box. Another common target area for wave Y, the 1 to the 1.236, is literally in the middle of the two, and a rare target area for Y, well, at least that one is quite close, but it is a rare target, so that's usually not one that you like to see hit for a wave Y. So that is also the reason why this is an alternative scenario at the moment. If we look at the bullish scenario, we're expecting more upside. So in this scenario, we are then looking for an A, B, and then either C already finished over here, or potentially C is gonna be finished over here, where you expect a lower low to be made. So price taking this low at about 25.8k to make a new low before then a reversal. Now the most common target area for wave C is between the 1 and the 1.236, taken from the high to the low of A to then the high of wave B. It is also just above the yellow target area over here, so one could argue that price might dip in the area, then eventually move to the upside, something like this, and the yellow target box is between 24.3k and 24.8k. Now this might be for me an alternative scenario, mainly because of the price action that we have on the lower time frame. So if this is already a finished ABC, and this being an AB and then wave C moving to the left low over here, then what you want to see is a continuation to the upside in an impulsive structure. So you want to see a 5-wave move up, 3 waves down, 5-wave moves up, and then a 1, 2, 3. However, on the lower time frame counts, this looks very much like a 3-wave structure and not a 5-wave structure, which is not really something you like to see. It's also very difficult to even count this as a 5-wave structure. And secondly, if this is the end of wave C, and this would be hypothetically a first wave to the upside, then if this over here is a 3-wave in a wave 2, then currently this low over here is made right on top of the 886, which is a rare target. Here you go. So it's a rare target, the 886, for a wave 2, and this then being a potential 1, 2, and a bigger 3 to the upside. So the 886 is rare, so this is not really something you like to see in an impulsive structure. So okay, potentially wave C is still in the making. However, The problem I have now is that, okay, this wave B then has to move to the left. So now you have this as a wave 1, 2, then you have a 1, 2, 3, 4, 5 in a wave 3. Then this is wave 4 and this is a wave 5. The problem now for me, however, is the overlap between wave 1, the low made, and this potentially then being a wave 4, where this is the high of wave 4. Overlap is, following the official rules of Elliott waves, is not really allowed. It can happen in very volatile environments like crypto can be, but I prefer to not see it. So this is something that also makes this bullish scenario an alternative scenario for me. So that is what I mentioned over here, overlap between wave 1 and wave 4. Another reason why I think that wave C might not be in over here on the left is because now wave C is shorter in time compared to wave A. So if this is wave A over here, you can take a fib time from the high of A to the low of A to then the high of B to compare the length of wave A in time to C in time. And you can see the vertical lines are fib time lines, and the low of wave C over here is made around the 0.618, which basically means this wave C is shorter. It's about 62% of the length of wave A, which usually wave C takes longer. And then finally, another argument is there was no target box over here for a bounce. So I really like my target boxes. They are usually very, very well respected, like we could see over here as well in the lower time frames. And I didn't really have any target box for support. We did have some support, which was a simple support resistance flip, resistance over here, support over here, but that isn't usually really like strong enough for then eventually a big move to the upside. So honestly, I am still expecting more downside. If we then go to the low time frame scenario, we have the bearish scenario over here, where the structure is already finished in a WXY, hitting the 0.618 common target for wave Y, taken from the low to the high of W to the low of X, also in very, very nice confluence with the target box that we have been looking for, right, between 27.3K and 27.4K, for then a move to the downside impulsively. The short setup we had over here with the bearish divergences, because you always want to see some proof of resistance in this area, and after price rejected, making lower highs, we saw in the CVD higher highs, bearish divergences, potential entry for the short trade. Now we are in the bullish support area, as you can see over here, which I'll explain in a second. So at least a take profit, no financial advice, but at least a take profit would be sensible, or just closing the trade for a nice trade. This was about a 125 RR, so that is actually pretty decent in my opinion. And in this scenario, we expect a continuation to the downside. However, I will show you with the micro scenario, counting this impulsive structure to the downside, that this might potentially be the low of an impulsive structure to the downside for then a reversal in the bullish scenario. So it's actually going to be quite interesting, but I'll talk about that in a second. If we then do go to the bullish scenario over here, then we're looking at this move to the upside in either a wave A or W, followed by a three-wave structure and then a wave X or B. And then we're expecting a move to the upside in either a wave Y or a wave C. The reason that now we have an ABC as well, because previously in previous videos I only had WXY, and there's an important little detail that now I also included a wave A, B and C, and that is because price hit the 0.9 Fibonacci taken from the low to the high over here, and the 0.9 is a target for a regular flat. So a flat is then a 3-3-5 wave move, while a WXY is a 3-3 and then a 3-wave move. So this is important because price hit the 0.9. You always have to now keep in mind that if price moves to the upside, it can be impulsive in then a wave C to the upside. Now in this bullish scenario, we've been looking at a 3-wave structure, and then this being a W, this being an X, and then an expanding flat ABC in the bigger wave Y, in the white wave Y, where wave B hit the target area perfectly for a wave B, which is between the 1.236 and the 1.38, taken from the high to the low of A. So that is very nice. Price wicking in this area for then a move to the downside, also around that target box. Bearish divergences was just a perfect setup for then a move to the downside, where the target area for wave C is this white box between the two, 1.618, currently bouncing on that 886 0.9 fib as mentioned. And what you want to see, usually if the 886 is hit, or the 0.9, but if the 886 is hit, you want to see it hit and run, basically. So you don't really like to see price coming back, ranging above the 886 for a longer period of time, because usually if there's going to be a range right on top of the 886, it is more bearish than that it is bullish. So that is a little nugget as well. And in this scenario, the potential trading setup is quite interesting. Why? Because it's very low risk. So the low over here is very, very close to a potential entry, and therefore the risk is very much reduced. Of course, preferably you wait for proof of support, so maybe a change in market structure, maybe a move to the upside, retracement, some bullish divergences locally, or whatever you have in your strategy, your plan, you know, what you're looking for. However, the risk to reward is always pretty nice if price is going to go to the 886, because the stop loss is relatively short, because it's below this low over here, for a relatively big trade to the upside where you expect these highs to be taken, if this is a WXY or an ABC, right? So that is quite attractive. No financial advice, of course, but this is based on the scenario, and you have to make sure you follow your plan on the lower time frames. And also, if you set stop losses and stuff, make sure it's at the invalidation of your personal plan. So this is quite interesting. If we then go to the micro scenario, this is where it starts to become actually very interesting, because, and I actually do like to really hammer this down, this looks to be a 1, 2, 1, 2, then you have a bigger 3, 4, and then a 5. The problem I have with this impulse for more downside is that if this is wave 3 over here, it is relatively short, right? If you want to see an impulse moving to the yellow target box at the lows, you want to see this wave 3 being longer for a impulsive structure, like a direct impulsive move like this, and then a 1, 2, 3, 4, 5, where 5 then hits the yellow target box. Now another potential scenario is that this is only the first wave, so this is then a wave 1, then you have a 3-wave corrective structure in a wave 2, where the invalidation for this scenario would then be price taking that high for then a continuation to the downside, right? So then you have a wave 1, 2, and then you're looking for a wave 3 to the downside. But yeah, we have to wait and see then how price is going to evolve to the upside, of course, because this is still very hypothetical. However, I just want to say that potentially the low of this move to the downside is in, because this wave 3 doesn't look too long for reaching this yellow target area, and this might actually fit the more bullish scenario as well, at least for maybe a bit of a bounce. So that could be nice, or potentially continuation. So I have to wait and see what happens. But in this scenario, we then have a 1, 2, 1, 2 setup, where the second 1, 2 over here, the second 1, 2 is then part of a bigger wave 3. So you have a 1, 2, 3, 4, 5, and then a bigger wave 3. And then the blue count is a 1, 2, 3, wave 4, and then this being a wave 5, where if we look at the volume, this last move to the downside was very, very high volume, not gonna lie, probably many people being stopped out, but it is a little bit lower than the volume that we had in wave 3, which is what you want to see. If this is part of a wave 3 and this is part of wave 5, you want to see wave 5 volume being lower than the highest amount of volume of wave 3, and it is indeed a little bit lower for the end of this wave 5. High nonetheless, but it is lower than wave 3, and that is what you want to see. An alternative scenario on the micro is that this wave 5 is not yet in, and we are currently working on the blue 4, so that means blue 3 and then the white 5, white 3 and white 4 are switching to the right, where now you then have a 1, 2, 3, 4, 5 in white to finish 3, working then on the wave 4 and then wave 5 to the downside to take this low. What I don't necessarily like about this is that, of course, then we go back to the 886 area, which is not an area, as I mentioned before, I like to see revisited for a potential bullish scenario. So if price is going to push to the downside once again, I think the bearish scenarios on the low time frame counts, as well as maybe even the medium time frame counts, are going to be more likely. We do have bullish CVD divergences. They already started when price was over here, but now price dropped, so the new low is going to be this one, where we have a low and a higher low in price, but we have a lower low on the CVD. And if I go to the 1 hour chart, you can actually see it. So let's take this one over here. So you have a higher low in price over here, higher low in price on the blue line, lower low on the CVD, which is a bullish divergence where the target is 27.6k. So in this particular scenario, the bullish CVD divergence is still valid, because the invalidation of this CVD divergence is price taking the low at 25.8k. and it hasn't done that yet. Now, of course, it is getting quite close, and this was a high volume move to the downside. So of course, be aware of potential downside to come, right, in the bearish scenarios as well. And if price pushes to the upside, I always prefer to see a little bit of proof of support. Always trade safe, trade disciplined, follow your plan, and then hopefully you make some good profit. Now, we do have important news today at 2:30 p.m. Central East European time. Make sure to check your time zone. We have high impact, as you can see by the red arrow over here, high impact news, which can create volatility on the chart. So make sure you trade safe around 2:30 p.m. Central East European time. I hope this video was helpful or valuable to you. Please check out the macro and the high time frame video if you're interested. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.